My name is Ken Hooper, and in conjunction with my fellow student Tala Amhaz, we will be sharing with you our interpretation on the foundations in relation to the Australian economy. This presentation will discuss how the Australian economy has evolved from the initial years of being a UK penal colony through to modern day times. We will discuss varying stages of the economy and the influence government, industry and foreign investment has had. We will explain what the changes and influences were along this journey, how they shaped Australian banking, manufacturing and the resource industries, how politics influenced and were influenced by different economic and social interactions. The Australian economy has been stable over the years in contrast to other economies in the world. However, Australia still has had its fair share of conflict. There have been periods where Australia has experienced to some degree examples of both capitalism and socialism. This has been important in the shaping of the Australian economy and social aspects we experience today. The period from 1788 to 1820 has been referred to as some as the Bridgehead economy. This period was the early British occupation of Australia as a penal colony. During this period, even though Australia was governed by the UK, who was heavily responsible for the supply of a range of goods, money and foreign exchange, we were relatively neglected due to the war efforts they had in France. The colony needed to develop private economic individual rights for property and labour, thus allowing private markets to develop, mainly through agriculture. This was based on land grants to convicts who had served their penalty and to senior officials within the colonies. Ex-convicts were also allowed limited freedoms to supply a range of goods and services. The development of these private markets was seen as a way to supply further resources to the motherland in the future. However, this did lead to several issues within the colony. In 1808, there was a conflict between Governor William Bligh and the New South Wales Corps, with accusations of corruption from the Corps between public and private affairs. This resulted in the Rum Rebellion. This conflict eventually led to Governor William Bligh losing power and being removed as governor. The appointment of Governor Lachlan Macquarie in 1810 brought about stability and introduced laws to allow ex-convicts to be introduced to roles of labourers, clerks, tradesmen and craftsmen, which would be the beginning of the new colony structure. Land pressures were being applied in areas immediately surrounding Sydney, so Macquarie relaxed restrictions on settlement. This relaxation resulted in several detrimental consequences. The relaxation resulted in people claiming land as they saw fit, classed as squatters. As there was no legal title required due to terra nullius, land could be merely pegged out and claimed. This had an impact on the indigenous population as the uncontrolled expansion crossed over their land, restricted their hunting and gathering, introduced disease, imposed forced removals and incited violence, having a devastating impact on the Aboriginal population. From the 1820s through to the 1930s, Australia experienced a new phase, which was commonly referred to as the pastoral and rural expansion. In the 1820s, the Australian economic growth was based on the production and export of wool and other rural commodities to Britain and other industrialised countries in Northern Europe. The 1830s saw further expansion in agriculture, whaling and land settlement, which was mostly fueled by British investment. This rapid investment and growth saw the migration of British banks into the Australian economy to form mortgage companies. Through this time, Australian trading banks operated in a largely unregulated environment through charters and acts, under which imposed certain restrictions on banks, including limitations on the types of lending, particularly around real property. The 1840 Colonial Bank Regulations stipulated some restrictions on bank lending, that all banknotes were payable on demand in coin. Even though these restrictions were introduced to try and regulate these banks, the constraints were widely evaded and progressively relaxed by legislative changes to have subsequent impacts on the years to follow. This resulted in mass amounts of capital being withdrawn from the Australian colony, resulting in the 1840 Depression. The depression of the 1840s and subsequent failures of several banks due to fraud, excessive defaults on loans, and risky lending practices brought about regulation on how banks operated. In New South Wales, 2 legislative initiatives were introduced to help banks and borrowers withstand the depression. In December 1841, legislation was passed relaxing the treatment of insolvents, permitting debtors with real prospects of honouring their loans to be able to retain the use of their property. This gave banks greater scope to restructure non-performing loans. In 1843, there was the introduction of wool liens, which was the advancement of monies for the next year's shear. And stock mortgages expanded the range of assets banks could take as collateral. This made it easier for the squatters, who had no fixed property assets, to obtain finance, hence withstanding the depression. The subsequent collapse of several banks combined with the depression resulted in zero confidence for people to invest in banking corporations. Between 1835 and 1865, savings banks were established in each of the colonies, either as a government-owned and controlled entity or under the management of a board of trustees, over whose appointment governments usually exercise some control. In Queensland, South Australia and Western Australia, private initiatives to establish savings banks were ultimately supplemented by the government-owned institutions to encourage local investment. The 1850s through to the 1890s saw a change in the Australian economy through the gold rush, rapid population growth, and high levels of capital provided by British banking and financial sources. This was referred to as the first long boom. The gold rush resulted in a massive surge in immigration and is a major export for Australia. The rush had substantial influence on both monetary and political matters, which we will touch on later through this presentation. Manufacturing industries began to develop in Australia, but these were not financed by the British, hence were reliant on local capital. As the local capital was not as substantial as the foreign investments, local manufacturing was found to be very labour intensive and of small scale. The Australian economy still remained heavily reliant on the British imports and manufactured goods, thus unable to grow substantially. During the 1870s, Australia benefited from its strong links to the British imperial power and exceptional value of wool, thus becoming the financial centre of the world. British imperial theory started to evolve the idea that Australia should produce a microeconomic version of the imperial society. This thought process was around producing an economic environment that would benefit Britain in the future. By the 1880s, more than 40% of all investment in Australia was from the public sector. By 1890, New South Wales public debt was £49 million, of which 90% of this was raised in London. 1890 also saw a second market crash and depression, highlighting the negative consequences of the Australian dependence on external capital and markets. This downturn was a result of declining wool prices, drought, and an ever-increased mortgage debt. The result, once again, was a massive exodus of British investment. This resulted in major shifts in the Australian political arena, which in turn influenced the formation of the National Federal Government in 1901. 1901 to 1939 saw a change in the Australian politics. The newly formed federation, which was strongly influenced by the mining sector, increasingly recognised the cost of British dependence for capital investment and the underdeveloped local industries, resulting in the rise in protectionist policies. The model developed institutional arrangements designed to ensure key parts of the Australian economy were shielded against volatility of the international markets, to take control of national issues such as custom duties, and to remove intercolonial tariffs, creating a single united Australian market. Protection of the manufacturing industry from overseas competition resulted in a centralised arbitrational system incorporating a minimum wage for the workers. This domestic defence model remained in place for 70 years, through the post-war boom until it was challenged in the 1970s and 1980s. Since the 1850s, Australia's mineral industry has played an integral part in shaping the economy and government of the country. At the start of the gold rush, the Australian government saw an opportunity to raise capital via the introduction of new taxes on miners to mine. This, combined with the restricted voting rights of the miners, fueled a fiery conflict between the two, resulting in a bloody battle at the Eureka Stockade. The end result introduced the new licensing system called the miners' right, and also introduced the voting privileges for miners. In 1893, there was another conflict between miners and government, when the government applied restrictions on mining processes. Again, conflict arose, albeit not as physical as the first. The end result was the formation of the Australian Federation in 1901. In 1908, BHP was seen as a very powerful corporation, but supplied very low standards for their workers. Continual slashing of wages eventually brought about a bond between the workers and unions for improved conditions, and resulted in another conflict, which eventually involved arbitration being introduced to protect the workers and their wages. 1914 saw another change towards mining and the economy through government intervention. War had broken out, and Germany was now seen as an enemy. Even though Germany was a major destination of export of minerals from Australia, as a war effort against Germany, supply was to stop. Over the years, mining progressed to include processing through steelworks. The industry found that the Australian government was now one of their major customers. From this, they saw an opportunity for the mining companies to use their wealth to infiltrate politics, to split and form their own party of preference to free up restrictions for the mining industry. Hence, the National Party was formed.
Thank you, Ken. In the 1980s, the Australian economy shifted from a national socialist to a social democracy, which is like a diluted form of free market neoliberalism. Unlike the UK and the US, where anti-union policies fueled that change, the shift in Australia's economy started when the federal government struck a deal with the ACTU, which is the Australian Council of Trade Unions. And that deal proposed that the union would stop wage demands, and in return, the government would minimize inflation, implement social services, and allow for unions to be merged. Now, how does the reform look and what does it entail? In this section, we're going to talk about the 5 reforms that the government has put together that helped shape the Australian economy as we know it today. We're going to talk about the floating of the dollar, the removal of the tariffs and the quotas on important goods, the privatization of the major industries, the introduction of superannuation, and then the introduction of taxes on goods and services along with income tax cuts. In 1983, the federal government floated the Australian dollar, and that basically made the economy a lot more adaptable to change. But like every change comes with a price. The currency trading gave the private power, and it led to the abuse of that power. In 1997, during the Asian financial crisis, the currency attacks were happening. Australia was better off withstanding that situation, but places like Malaysia, South Korea, and Thailand were not. In 1986, the Australia Act makes Australian law fully independent of the British Parliament and the legal system. So what happened is between the 1980s and the 90s, it marked the privatization and the deregulation of the banking system with the independence of the Reserve Bank. See, the Australian government fought hard to keep the banking system private up until the 1980s, when the federal government allowed foreign banks to enter the Australian market and allow the banking sector to set its own interest rates. In 1996, after there was a lot of competition in the banking market, the Liberal government gave the Reserve Bank of Australia the power to set interest and inflation rates independent of government. So, although this led Australians to pay one of the highest bank charges and interest rates in the world, it actually played a major role in sparing Australia from the events that led to the 2007-2008 financial crisis. The separation of the banking system from government prevented the government from the use of the banking system to proclaim a social agenda in the housing market, which eventually crashed down hard. During what was going on in the banking sector between the 80s and the 90s, in 1998, the federal government realized that Australia cannot compete with the manufacturing industry in Asia. Even if they raise the tariffs and quotas on the important goods, they will not be able to compete with the low prices that they were offering. So they decided to actually remove these charges, causing the prices of goods to drop. It actually reduced inflation because the cost of the business is lowered by outsourcing to a cheaper manufacturer. This change caused a fall in some of the manufacturing industries. It affected the textile and the clothing industry quite hard, but it's only for the short term. Because in the long term, that change pushed for innovation, and the manufacturing sector actually grew by 40% in the next 2 decades. Now, a growth of 40% in an industry and a change like this obviously comes with corruption. Corruption is one of the highest threats to an economy and government. It stops social reform and changes, and that change leaves ways to poverty and environmental decay and even moral destruction. So in the 1990, the Fitzgerald inquiry found corruption in the ranks, which were put in jail, and the National Integrity System was introduced for future prevention of corruption. And it said that because of that system, we enjoy an economy, or it plays a part of the success of the economy of Australia till now. In 1991, and in the spirit of innovation, privatization happened. The first was the privatization of the Commonwealth Bank by the federal government, then the airlines Qantas. Then the new federal government sold Telstra, and which is a telecom company. So all of this privatization has actually led to a safe sail through the global financial crisis. Moving to 1992, the compulsory superannuation was introduced. Now, this changed the economy as well as the social values. Basically, what it did is regular wage earners in Australia became a lot more invested in the success of the economy and motivated by sustainable profitability and ethical practice and corporate governance. So this pushed for a better outcome because people cared where their money was going. In 1996, the federal government introduced a goods and service tax along with income tax cuts. So by now, we have all of these factors that led Australia to become one of the wealthiest countries in the world. And in 2008, while the world was struggling a global financial market, the global financial crisis, the Australia government released fiscal stimulus to help minimize the effect of that crisis. So the steady flow of natural resources to China, along with all of the factors listed, kept the economy stable and successful. The economy does not thrive, it survives, but for it to thrive again, the economy needs to depend on not only China, it has to have a more diverse reliance on the world. The biggest conversation that is affecting the Australian economy this year is COVID being at the center of it. Will the stimulus packages continue? Will JobKeeper might disappear soon? There is no wage increase. Will the tourism and the hospitality industry recover? While Australia and New Zealand have COVID under control, the rest of the world is not coping well with it. So what does it mean for the future of Australia? In conclusion, or to recap everything that we went through, up until the 1980s, the Australian economy was labeled as a national socialist. It had high inflation, high unemployment. Major industries like telecom and transport and banking and education were either government owned or government regulated. This caused a slump and a slump and a lack of innovation to help the economy progress further. So the reforms that were put together and the reforms that we discussed earlier opened the economy to foreign market and it made it a lot more competitive. It privatized the banking system, it removed the import tariffs, It promoted gender equality from an economic standpoint, not only from a human rights standpoint. It introduced compulsory superannuation, which helped the government become much richer. It ended centralized wage fixing and introduced goods and service taxes with cuts on income tax. Today, the economic success and growth is mainly dependent on the mining sector, along with all of these reforms that were done. So although like there's no doubt that these reforms that happened since the 1980s are labeled economically successful from a capitalist point of view, but the question is, did the economic growth factor in the sustainability of the mining industry that the economy relies on so well? Did we factor in the impact of the land? Are we measuring the success based on a triple bottom line? And how long can this success be sustained? These are the questions that we will be asking ourselves in regards to the economy of Australia and every single economy for the future